The dollar versus Swiss corrected right into resistance and trading here today before moving back to the downside. We're trading at the lowest levels going back to, well, just October 29th. But nevertheless, extending the move to the downside. So I'll talk about the technicals that are driving this currency pair in this video. So let's get started. Looking at the 4-hour chart of this currency pair, we fell sharply earlier this week. That was off of the news item that Switzerland and the U.S. were working toward an agreement to lower the tariffs from 39% to 15%. We did see a rebound near the 200 bar moving average on the 4-hour chart. And what happened in trading yesterday was the market moved up to retest the 100 bar moving average. Found willing sellers against that level. Also, level was a swing area through here. So the sellers remained in control, and then we moved below the 200 bar moving average on its way to new lows below the 80 level, which was key. And then the rebound in the early session today saw the price move up to retest that 200 bar moving average on the 4-hour chart. The level came in at 0.7995, and as I posted yesterday in the video on this currency pair, staying below the 80 level was probably a key level, or was going to be a key level for this currency pair. As long as the price remained below that level, that would be give the sellers more control. Also, staying below the 200 bar moving average was another indication of seller control. And so holding that level, holding below the 80 level, pushed the price lower when we broke below the low price from earlier today, or late yesterday actually. The price then continued its move to the downside and moved down to retest the 61.8% retracement of this move to the upside. The level comes in at 0.7941. So the technicals are following along the roadmap that we've laid out. If the selling momentum is going to continue, the next key target on the downside would be this swing area defined by different swing lows and highs going back in time through here. More recently, these lows right through here correspond with that low right there. So getting below this level would be something more bearish, and then we start to look toward this swing level down through here, which goes back in time to even back to here. So that would be the roadmap to the downside for this pair. Conversely, stay below the 50% retracement level is a close resistance, and obviously the 200 bar moving average on the 4-hour chart plus the 80 level is still close resistance or key resistance on the top side that the price would need to stay below in order to keep the sellers more in control. So that's my technical look at the dollar versus Swiss to kickstart your day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.